Coins, Cashflow, and Conversations podcast. I am your host, Dakota Grady, sponsored by Upstate Essential Solutions. If you need help with accounting and taxes, if you're a nurse practitioner entrepreneur, mid-spa owner, or esthetician, contact me today at dakotagrady.com. And if you need help with personal finances, contact me at dakotagrady.com. And while you're there on the website, get you a free resource to help you save money with tax strategies for your business at dakotagrady.com. Click on the tab that says Tax Solutions and get the free resource there. Again, the website is dakotagrady.com. Hey y'all, welcome to the podcast. Today we're talking about, should you buy a new car? That's right, should you finance a new car? Great question. Let's dive right into this. So, my sentiments is on car payments, don't go into debt for a car. Today we're going to talk about why. Why should you not finance a vehicle? First, you got to focus on the value of the car. According to Edmunds.com, basically, it's showing that the moment you drive a vehicle off the lot, the value of the car goes down by 9%, right? 9%. It's not a lot, right? But over a 5-year period, the car loses value, 60% of its value over 5 years. So let's, for example, average car is showing that according to Yahoo Finance, reported by them, is also reported by Experian. It says that the average car payment, monthly payment for new car is $726. That loan amount is $40,184. Interest rate 7.03% for 68.26 months, right? About 70 months. For a used car, the average car payment is $533. Loan amount $27,167. Interest rate 11.35% for a long period of 67.57 months. So again, the source is Yahoo Finance, and that source came from Experian State of Automotive Finance Market, third quarter 2023. So this is new information, y'all, relatively new. So you got a car going on in value, 40 grand, all right? 4184. I'm gonna use my calculator to do my math. So if you get that car at $40,000, the moment you drive off the lot, it's going to depreciate in value. Means the value of it is going to decline by $3,600. Again, not significant, but that means at that point you won't be able to get what you pay for the car if you afford to sell it. So instead of you selling that car for $40,000, you will only be able to sell it for $36,000, $36,500, right? So you lost value because you drove the car off the lot. You used it. It's no longer new. Now it's a used car. Because you drove it off the lot, it's no longer a new vehicle. It may be new to you, but according to that particular dealership, it's now a used vehicle. So you won't be able to get the value of it. And again, if you have it for 5 years, the car is going to go down in value 60%. So again, looking at an example, loan amount is $40,184 times 60%. That car would have depreciated or gone down in value over $24,000. $24,110 basically. So $24,110, keep the number in my head. So at the end of 5 years, you would be only able to sell that car for $16,000, $1,674. You paid 40 grand for it, plus interest, and you will only be able to get out of after 5 years, $16K. Crazy, right? Well, that's what you get when you purchase a new car. The value of it is going to go down. Now, of course, different cars, different vehicles have more durability in terms of their depreciation. They don't depreciate as much. Some may do faster. But on average, I mean, it's going to go down 9%. So when you drive a lot, over 5 years, it's going to depreciate 60%. More than half the value of the vehicle is going to be gone. That's why I recommend you getting a car. Get a used car if you can. Oh, let me talk about other things you gotta talk about. Car payment, $726 per month, about $8,000 per year, right? Over $8,000 actually. And you talk about gas, depending on where you live, how much you commute, it's going to take a cost too. Car insurance, in fact, Yahoo Finance says the average car insurance is, I think it's at $168, I believe. Yes, the average cost of car insurance is about $168 per month, right? So, car payment, gas, insurance, maintenance, oil change, transmission flush, radiator flush, brakes, struts, rotors, all those things add up to the cost of your vehicle. It's something that's going down in value. You're actually going to add economic value to it because you're getting from point A to point B, point A to point Z, wherever you're going, whatever you're doing. But the whole point is, when you sell it, you can't get the value of what you actually paid for it. So you're actually going to pay more than, if you calculate all the costs involved, which I've mentioned to you before, you're actually going to pay more than the $40K. Again, those are maintenance, but still, the whole point you're paying to maintain the car too. Crazy. Why would you pay $40K for a vehicle and it's going to go down in value? You can't get that money back out of it. Some of it, a portion of it, but not all of it. That's why I say buy used. If you can take the challenge of saving $726 per month, if you can afford it, or $533 per month for a used car, which is the actual average monthly car payment for a used car, $533. Do that for a year. Do the math on that. $533 times 12 months, $6,300. Do that times 2, $12,000. If you can accelerate that and save more than the $533 or more than $726, do it. Just so you can stay out of car payment land, because when you get a car payment, again, the value goes down on it. You gotta pay all these extra things to maintain the car. And then on top of that, you pay back more because you're paying interest for the car. Because you're using OPM, you don't have the money to pay $40,000 for a new car, do you? No, it's why you finance it. You go into debt for something that you can't afford so you can look good and drive and get where you need to go to. But the whole point is, stay out of car payment land. For a used car, you're paying 11.35% interest. That's crazy. That's crazy. So, if you're paying, let's see, for example, $533.35, you're gonna pay basically like $60 in interest. And that's just for one month right there. And of course, this I'm doing for the year. If I just do 11.35% divided by 12 months, if you're doing monthly, you would probably pay like about 1%, which is a whole lot, but still though, on interest, yeah, you pay about 1% per month, but still, if you add all it up, you're paying a lot in interest for something that's a used vehicle. $27,000 is a lot for a used vehicle. So I recommend using cash. If you possibly can do this, instead of paying for a car payment, save that money, put it in a savings account, and get you a used car with cash that's reliable, dependable, and the depreciation will already been taken on it. So you won't take the hit in depreciation. And during that time, keeping that car, maintain it, also save money so that you can buy another car when the time comes. Because that car you're going to buy is going to also get used up, and hopefully, it's going to be you're going to have to replace it eventually. So make sure you be prepared with the rainy day fund. But make sure you don't go into car payment land. Stay out of car payment land. Buy used, reliable car with cash, so you won't stay broke. And keeping the dealerships in business and keeping them making money off of you. Alright, so this is the Coins Cashflow and Conversations podcast. I hope this was valuable. Please comment, like, subscribe. Send me messages. What topics you want to hear about. Whether it be investing, saving, debt, budgeting, whatever you want to talk about, send me a message. Comment, like, subscribe, share the podcast, the Coins Cashflow Conversation Podcast. Also, my book's available, Broke, Secret to Fix American Financial Crisis, on my website at dakotagrady.com. And if you want to copy my journal, Dakota Grady at dakotagrady.com is the website. Again, go to dakotagrady.com for resources about accounting and taxes and personal finances. And also go to the tab that says Tax Solutions and get a free resource to help you save money in your business with tax strategies, y'all. Thank y'all for joining me on the Coins, Cashflow, and Conversation Podcast.